everybody. Welcome to your Tuesday edition of the TraderMerlin Show. Hello. We got Ivan and Eric, Big Gab, Glenn, good to see you, Thomasina, David, Lisa, Les, and Skilled Stockman. Thomasina, did you like that music video? Man, I'll tell you what. I'll let you guys know more about this hilarious music video that I have a donkey of the day today as well. Anyway, one thing, I shouldn't have even done this show today. I'm actually supposed to be in an executive leadership meeting for Online Trading Academy, so I will probably get yelled at. I have an absolute hard stop at in 30 minutes. I was almost going to cancel the show, but I just couldn't do that to you guys because I told you I was going to do a show today, so here we are, so let's get rolling. I'm going to do an open Q&A today. I've got a bunch of questions that have come in that I need to get to. First and foremost goes to usually our leader in this room who gets here very first today, Skilled Stocksman. Beat him with a yo. Les Gold. He asked this question probably 3 or 4 days ago, I think. I don't remember, but I've been meaning to get to it. We talked about some of the car companies, and there's a second one here that says, what are your thoughts on GM? Well, Les says, what about Ford? Why might this be happening to price, and where might it go? Would you consider selling cash-secured puts? Well, I guess it all really depends on where you think price is going to go. Just because something's cheap doesn't mean it's going to continue to, going to rally up all of a sudden. So I think, Les, my guess was probably as we were getting into this lower range of this yellow box, which I could probably remove now. That box is now dead. My feeling when we were getting down below this 1862 mark on Ford was that we might actually continue drifting and close this gap at around 1560. So, to your question, which is a good one, if you thought that Ford was going to be good for the long haul, but still maybe it was going to drift down a little bit more, then yeah, I would go out there and I would say, let's go look at maybe the 16s, right? Sell some cash secured puts at 16, maybe collect a little bit, and I'll show you the chart here. Maybe collect a little bit of premium on those options, and if it doesn't get there, oh well, I missed it. Now, the candle that formed today on Ford is a nice one. This is almost a hammer formation, so I'm actually liking this as a potential move up for tomorrow. Again, you guys know my rules, which are you basically wait for it to break above the high of today. That's, call it 1793. So if you get above 18, you might get some nice upside move and close this other gap that we formed just a few days ago. So all in all, what about Ford? Well, it looks ugly right now just because of this big sell-off, but, grand scheme of things, it's one of the better looking ones, right? You've got this constant uptrend. You've got a pullback. Now, I'm not exactly sure where this pullback is, but if we pull up the long period moving average, we're probably above that moving average. There you go. Here's your 200. Really, it's been on a great uptrend since the pandemic bottom in 2020. Now, granted, everything has been in a beautiful uptrend. Well, almost everything has been in a beautiful uptrend since 2020. But, this is just a pullback. The question is, where's an area of demand that you feel comfortable buying that pullback? So I probably wouldn't buy it right now. If I'm going to short-term trade it, I'll wait for that break above 18 bucks tomorrow. If not, I do think less that selling cash-secured puts could be a way to generate some income on this one. I'm just not sure how much premium you'll get. It may not be a lot of premium, but it's better than nothing. Now, to the other question here, which jumps into Ford's category, which is from Ethan, thoughts on General Motors. Well, we covered this a week or so ago. General Motors is kind of at the same position that Ford was at 4 days ago, which is sitting right at an area, call it demand. It's not the best, but it's just kind of a floor that has been established over the past year and a half or so. If we get a close below this kind of 48.17 mark, call it a close below 48, there might be some gap fills that go all the way down to 45 bucks. So it's looking weaker and weaker. I always do this to you guys. I always talk about a chart and I forget to show you. Big Eb says GM looks sort of likewise to Ford. Yeah, I agree. But, when we look out bigger picture, which long-term chart looks better? Let's go to a weekly. Good point there, Tom. You look here at General Motors. General Motors has had that big run-up as well. But when I go to Ford, to me, it looks like whatever Ford's ailment was, because it was just drifting down from 2013 all the way to 2020. I mean, it was just a 7-year downtrend. Oh, it'll bounce back. 7 years of nothing but down. Little slight bumps up, but just the trend is down. Whatever the reason is, in 2020, they fixed all that, or at least that's the perception in the marketplace. So I'm not exactly sure, why it's doing so well right now. But just this snapshot alone, let's go from that peak where Ford is really tanking, right? there, right? And you go to GM, I personally think that Ford looks better just from my perspective. It looks to me like General Motors was just going sideways, not doing anything, whereas Ford was in a steady decline. And when you are in a decline like that, you've got to stop it and turn it around. Otherwise, you look like General Motors chart, which is just sideways chop, not doing anything. Of course, you could look at something like Tesla and all be in awe over that chart, but yeah, where were we buying back here in the wee early days of Tesla at a couple bucks a share? Oh, shame on me. So, Ethan, thoughts on General Motors? I think you're at a critical point on GM right now. If it gets down below that demand zone or that kind of support line, if you will, at 48. I think you got some rollover. And I know that a lot of people are optimistic on General Motors because their, multi-billion-dollar commitment to electric vehicles in the Detroit area and kind of refitting all those ones. So I think long-term it will be good, just not right now. Which way do you think the U.S. dollar is going? Well, first, before I get to the U.S. dollar, we got to give a shout-out to one of our regular listeners over here. We've got Tomasino, who I didn't realize was your birthday today. Here you are, watching the show on your birthday. If I had little virtual candles, I would get some candles and maybe sing, but my voice is absolutely horrible, so I won't be singing to you. But happy birthday. I hope you have a fantastic day, eat some great food, go do something fun, and you made it another year. The finish line's crossed. Yay! Now on to the next. 28 today? 27? All right, let's see. Unfortunately, I'm going to get these little pop-ups because they're messaging me to come back to this meeting, but I'll ignore them. So if you hear little dings every now and again, my apologies. I'm supposed to be elsewhere right now. Let me go to some other question. Delphine, I believe this is how I pronounce it. Delphine says, I'm looking at GLD and GLDM. I've done some research and I'm just not quite sure why I should choose one over the other. Can you help me out with some insights here? I'm a long-term investor, therefore should I focus on the expense ratio between the two and choose the one with the lowest expense ratio? Yeah, it's well, happy birthday, NJ. We got double birthdays going on over here. This is crazy. Shenanigans. Where were your parents 9 months ago? All right, so let's look at the price charts because GLD, as you guys know, is like the main staple for gold. It's a gold ETF. But GLDM is just a mini. It's a smaller version of it. And there are some weird pieces here. So let's look at GLD. All right, you can price chart. I may just clean all this off. I got some. All right, so here's your weekly on GLD. Let's go back to it's really kind of a boring chart, to be honest. I mean, it's just consolidating down, but you get the gist of it. That's the price of gold. Then you look at GLDM, and you're going, wait a minute, isn't that the exact same chart? Well, what I did is I went over to stockcharts.com, and I pulled up a comparison chart. So what I'm looking at here is, in red is GLD, and then in blue or purple is the minis. And you notice they're almost exactly the same, although the longer that this is tracking together, and it only goes back to May of 2021, the longer that it tracks together, you'll see the more that the red one is starting to lag behind on up moves. Right? To me, this is pretty important. And why is that important? Well, it's because there's fees are higher with GLD. GLD's fee is 0.4%, and GLDM is only 0.18%. Now, I got a question that I'm sitting here in my mind going, okay, wait a minute. I'm going to create a product. We'll call it Pepsi in a 12-ounce can. But then I can actually, no, here's a good example. GLD is a 2-liter bottle of Coca-Cola, right? It just is for this example. GLD is a 2-liter bottle of Coca-Cola, but GLDM is a 12-ounce can. It should be tracking the same liquid, the same substance, right? So you would think that the 2-liter bottle should be cheaper. It has less fees because there's less packaging to do, 2 liters versus a beverage versus a 12-ounce can. It's almost backwards with these two. Again, GLDM has a 0.18% management fee, whereas GLD has a 0.4%. So I agree with you, Delphine. If you're thinking of gold long term, and you say, all right, I want to hold it for a long time, then you're probably better off buying GLDM. Now, I see there's another one, which from Mark Simpson is the IAU. I can add that in here just so we can see tracking. All right, so that's going to put that in gold, and that, again, is spot on. Now, I don't know the fee structure on IAU. I can check that one out for you guys, but those are all, lockstep. is the IAU, GLD, and GLDM. Let me just look it up. I'm looking up the Gold Trust and see what the fees are on that one, just so I can have a reference point. So expense ratio is 0.25. So it should be closer to GLDM, but still, on the grand scheme of things, GLDM would be the way to go, given the lowest expense ratio. So there you go. Riddle that one out. Let's see. Let me got one more question here on this sheet. I can do this one real quick for Allison. She says, "Do you see?" I just want to make sure I get out of here in 20 minutes. Do you see Peloton getting back to $90? You know, today was a great day for anybody who was long on Peloton. It was or Peloton, Peton. Here is the chart of Peloton for you. You had a great pop today, but just look at the chart. You know, the trend is your friend to the bend at the end. Did this really change direction today, or did we have one, great day? To me, it's still in a downtrend. And again, I'm looking big picture for myself. I'm saying, are people going to be rushing out to buy Pelotons? I mean, gyms are open. I don't know if I told you guys that I just recently reopened my membership at 24 Hour Fitness and went in over the last couple of days. And I mean, that place is packed. It's more packed than it was pre-COVID. It's nuts. I was just kind of shocked at how busy that place was. But, people bought these Pelotons because I can't get outside, my gym's closed, etc. But now all of a sudden you're seeing all these gyms open where you can go to ride tons of bikes, workout bikes, and not have to pay monthly fees for that, but you have access to the whole gym. So to me, I know there's buyout rumors. There's management changes. There's board of directors shakeups. But, does that mean that Peloton's going to be back up to that $125 mark? Probably not. Does it move back up from here? Sure. I personally don't think it's going to end up closing that gap at $90. I just don't see that happening. And we'll go longer term here so you can see the bigger picture. Here's your monthly. This looks like a pump and dump, doesn't it? This is a monthly, just to give you a perspective. Very interesting. Here's a weekly, maybe is a little bit better for us to look at. I just don't see it anywhere near these heydays. It's kind of like saying, do you think Zoom is going to get back up to its heyday peak? Absolutely not. I'm still bearish. I mean, heck, I can't remember when we talked about it in the show, but how many times did I tell you guys, short Zoom? I'm bearish on Zoom. I think Zoom's going to have too much competition. It hasn't turned up yet. It just continues to keep on going. Down at 142 today. Gosh, I think we were in the 400s and we're like, get out of Zoom. Anyway, as far as Peton, Allison, I don't see it. I don't see it getting back up to 90. Again, this is one of those things you could, take a flyer on, and you could buy some, deep out of the money call options if you wanted. You get them real cheap, and if it does get up there, you make a huge rate of return percentage. But it's just too risky. It's too much of a gamble for me, and I'm not really a gambler. I'm a speculator, which means I take calculated risks, and to me, this is not a calculated risk. I just think, Nope, don't like it. Let's see, did I get any more? I'm going to make sure I get through as many questions as I can. All right, I think I have a few more that came in, but I want to make sure I get to the live ones that came through chat today. CL, so I didn't go through our top few here. I was actually just about to pull the trigger on some more puts on Russell 2000 today. So I'm going to just kind of run through our top markets that we normally go through, and then I'll go look at your CL since that's the worst performer on the day. If you notice what's happening with the Russell 2000 right now, it actually is forming, it's subjective, I know, art is in the eye of the beholder, but it's kind of making these higher lows, which is the only reason I didn't buy some more puts on this. It's coming right up into this area that it had challenge with us last week, at the tail end of last week, right around 2045. So I'm going to wait and see what happens tomorrow, but I'll probably add some more puts on my Russell position. And again, I'm buying the Mays. I'm in the May options right now just because I want to give myself enough room for this market to start to react to the March rate increase, which I think is on the table, plus the bigger talk track about tapering. So we'll have to wait and see, but Russell was your best performer, 1.7% to the upside. All in all, it does look bullish in the very short term, still bearish in the intermediate term. All right, NASDAQ. Technically, I don't like this chart. There's really no play here. You notice that it's made a lower high 4 days in a row. It's made a higher low 3 days in a row. Well, almost 3 days in a row. So really nothing to be said here other than, yay, your NQ was up 1.28%. Really not a lot of important data I can glean from this chart, so I'll move on. Dow. Similar picture, although it's not as congested as the Russell. It had a nice update today, 1.18%, but still the big picture for me, I need it to be breaking out of something. I need to see some moves above 35.6, which is where it hit its head on last week. So still nothing there important for me. Picked up a couple spots. Good. All right, we're on the same boat, Big Eb. S&P, same thing. You have this. I'm gonna leave these lines on here. Hopefully, we can look at this in 3 months and be like, damn, we nailed that one. That would be great. Doesn't always happen that way, but it went a little bit higher than I thought. We're starting to see it drift down. We'll see if we get some more downside move this week. But all in all, it's the same looking chart as the Russell. Big up move followed by some consolidation, so there's no news there. Gold, same thing. Gold's rallying. It's had a great little run over the past couple of weeks, up 0.27% today on the gold futures, but still, we are stuck in the midst of this gigantic pennant formation. So until we break above that downsloping trend line to the upside, I'm really not excited about adding anything to my gold position. I'll just keep that. Or my silver, by the way. I know we normally don't look at silver, but here's SLV. Silver had a nice day today, up 0.85%. Still not going to add anything to that. It's just too close to the lows here. Might try to scale out of it if we get up to that 2350. But right there, And I got two more. Bitcoin. A little bit of hesitation on our daily here for Bitcoin. It's had a wild move today. It was kind of fun watching this one. You had huge swings down and then all of a sudden ripped up here. Nice pop. We were gaining a lot of the initial losses. But all in all, Bitcoin just barely to the upside at 0.17% over the last 24 hours. And now to Big Eb's question. Crude oil. Yum. Okay. Kind of difficult because the ceiling is breached. Now, what I mean by that is I like to do, I like ascending triangles and pattern formations like that. Intraday, I was watching this today, and I was like, okay, it's starting to move up. Is it going to pop? And I thought maybe I'll just short it on the short term, but I just didn't have time near the end of the day, so I backed away from crude oil. So we'll leave, backed away from before the show today on going short. I generally don't like shorting after hours. This is a 5-minute here, but let's look at the daily and see what we can get from that because it was fun intraday. There were some nice moves. All right, now you asked about do I think it's going to continue down? Well, we had that shooting or the Harambe pattern yesterday. You guys all remember we talked about the breaking below this red line here, whatever color that is, 89.93. I think that's that's green line, whatever. The horizontal line on the screen, that was the bottom. I actually took that off. This was where we talked about yesterday, which is below, I think, 90.78, somewhere in there. It's the low of yesterday's candle would be the initiation of a short for crude oil, and that was nice follow through today. We had 1.69% down move. Do I think it's going to continue? Where would I think it's going to go, Big Eb? I'll put another line on here. If I thought this was going to sell off, my logical first stop is the origin of this next big pop, and we almost hit it today, right? It wasn't a monster sell-off, but it came right back down to the origin of this move. If that one breaks, I really don't see anything substantial that's fresh until you get down to roughly the 78, 80 mark on crude oil. So, I'll have to wait and see. If I expected it to bounce, which I felt there was going to be a sell-off, obviously I wanted to sell off more because I wouldn't mind filling up my tank with cheaper gas. But right now, that's your bounce point. Happened today, came right down to it and bounced off. We'll see if there's any follow-through tomorrow, but the candles don't really tell me anything. Only thing I was looking for was the follow-through on the Harambe formation that you had there. All right, I'm going back through. I am long, but I'm still very... Let's see. So just bear with me. I'm rolling back through here to look at some questions that came through. Where are my questions? Which way do you think the U.S. dollar is going from Glenn? That's a good one. You had a couple great things in the currency market. So... if you look at where the dollar's at, I'm bullish on the dollar. I think this is just a pullback in the bigger uptrend, right? So I'm bullish on it. The question is this the bounce point, or do we actually test these lows that go back into January? If you're playing the dollar and looking at the dollar, I think it's important to look at the euro as well because the euro had a great double top a couple days ago. You guys can see that euro rallying up and basically hit perfectly double top, and it's been going sideways. So this, to me, tells me a couple of things. Number one, you got a double top, which is a typical reversal formation. So I'm actually expecting the euro to decline here. If the euro declines, where's the dollar going to go? Dollar going to move up. It's a typical inverse relationship. And you can see it's kind of curling here a little bit. So I'm bullish on the dollar anyway because of what's going on with bonds, what's going on with interest rates, what's going on with inflation. The second side of it is I've got the euro, which is a major component of the dollar index, is looking all of a sudden bearish. So I'm looking at this dollar index, the Dixie, bullish over the next few days. And how long? I don't know. I have no crystal ball with regards to that. But I'm bullish on the dollar, bearish on the euro for you Forex traders out there. Might have some opportunity in those ones. So there you go, Glenn. That's my thoughts on that. NJ, thoughts on Wall. Western Alliance, huh? I mean, technically, I'm okay with it unless it breaks 90.50. If we get a close down below 90.50, you got to get out of whatever long positions you're in. But from a trend perspective, it was great, but now it just doesn't feel like it's got a lot of strength to it. You know, if I had to say it's going to go one direction or the other, I would have to say it's going to be going to the upside and most likely headed towards those highs and challenging them. But remember, we're looking at an equity market that is under a lot of pressure right now, and I think you're going to see that slide down a bit more. So be very careful here if you're trying to buy dips, because the trend, in my opinion, feels like it's starting to reverse a little bit. It hasn't done it fully, but it's just showing a little bit of weakness. And if those markets roll over, if we see this S&P officially do this pattern here, you shouldn't be holding anything long. Right? If the S&P gets below 4,200, you should hold nothing long. You should be buying puts or whatever you can to protect your portfolio, because we could see some big drops here. That would mean it's officially making new lows, lower highs. That's the definition of a trend. And then all of a sudden, the negative stuff starts pouring in. Keep in mind, there's another piece here that's important for all of us, and that's the 10-year. Talked about that with Bill Addis yesterday. Well, look at the yield today. Whoa! It was screaming. I mean, this thing's ripping. So, you know, you could get over 2% by the end of the week. And you notice that's this top green line. I can't tell what color it is, but this top line I have right here. Let me get rid of some other lines. This top line I have here, that's the big stopping point in the sand right now. And if we get above that, you know, there's not too many big turning point potential spots, which means momentum could really pick up for this 10-year. And of course, that would drive a lot of people to scramble to buy homes and get mortgages as quickly as possible, which could give one last little burst to this equity market and housing market, and then all of a sudden money gets too expensive. So keep your eye on that 10-year. That was a big one for me today. Let's see. What's the big battery play? Tesla, Samsung? I don't know. I haven't dug too deep into that one. How much time do I got left? All right, 8 minutes. I'm going to be yelled at so bad today. Oh, I need to do something. Hold on. Let's bring a jackass into the picture. Let's talk about a donkey of the day. So normally for a donkey of the day, I like to, and it's. I know it's rude. Your parents are like, you treat people with respect, and you shouldn't point out anybody's weaknesses, yada yada yada, and be supportive. I don't know. Every now and again, I think you should look at someone and go, "You're a jackass. You're a donkey of the day. What an absolute mule you are." So, as you guys may recall, in 2016, Bitfinex was hacked for like 120,000 Bitcoin. One of the largest heists where no one was injured, no guns, no nothing, just it was gone. Kaiser Sose, vanished forever. Well, I think I mentioned it here. I know I talked about it in the CIL, which we'll talk more in depth about this tonight, but I just want to give you guys a little taste of it. They started moving some of these Bitcoin a couple weeks ago, and it was basically you can flag a Bitcoin address and say, if anything moves from that, give me an alert. So there's a thing called Whale Alert, and they track all these kind of bad addresses, and as soon as, like the second that any of them move, they instantly post it online, and of course regulators and law offices, I'm sure, were looking at that. Well, they finally found the two that were responsible for it, and now they've got them arrested, and they're saying it's for laundering $3.6 billion worth of Bitcoin. Now, you look at people's profile pictures, and you kind of get a little sense as to who they are, but this is the girl right here. Her name is Heather Morgan. She's 31, and her husband, Ilya, I don't have his picture here. This girl is cray-cray, and in a full, I mean that in not even the nicest sense of the word. She is crazy. If you want, I posted on my Twitter a video that she did. She recorded this video. She thinks she's a rapper. She thinks she's some great, motivational speaker. So she's got this group called RazzleCon. It's like her alias, and it's like it is so bad. She should get a double donkey of the day for recording that video, but I posted on my Twitter. If you are not into profanity, I would recommend not watching it. I put not safe for work, but I just had to get that one out there because it's cracked me up. Her and her husband are going to be going away for quite a while for $3.6 billion of money laundering. They think that they're so clever. She's even rapping about it, hacking people and stuff like that. It's like, bravo. You know, I don't know if you guys know this, but there is a famous rock group from Australia who the drummer put a hit out. He hired a hitman to kill his wife. And I don't know when you could... I'm going to do a triple donkey of the day. One more just for posterity purposes here today. You know, this guy, he literally wrote a song with AC/DC. He's the drummer for AC/DC. You guys might know the band. And it's called Dirty Deeds Done Dirt Cheap. And he literally wrote a verse about exactly what he was doing, hiring a hitman to kill his wife. And you're like, you know, if I'm going to do anything that questionable and stupid, no one's going to know about it. I'm not even going to have a phone on in the room or any electronic device so prying eyes couldn't hear me, let alone write a song about it. Sorry, I know I've digressed today. We've done a weird show. A weird show. Hasn't had time to cancel her Twitter because she said, exactly. Correct, Chase. And oh yeah, and thank you for, I actually posted this because I think this is interesting. I made a Twitter post today which said, true or false, the U.S. government currently holds more Bitcoin on its balance sheet than any other country in the world. This is true. Believe it or not, this is true. Because the government just basically, as Chase puts, got 94,000 Bitcoin from their account. So technically, it will be given back. Now, here's something very interesting is, you know, what is the government going to do with these 94,000 Bitcoin? That's $3.6 billion worth of Bitcoin. That is a boatload of money. The question is, from a lot of people, does the government, I have 3 minutes left, does the government keep the Bitcoin and give Bitfinex fiat currency, which they just printed, and now the government will have it on their balance sheet, which if I was the Department of Justice and the feds, that's what I'd be doing. I'd go to the Treasury and say, hey, let's just give them cash. Their customers got paid. We're going to pay them with printed fiat garbage. And now we've got Bitcoin, which has a finite source, and long term will probably be much better off. Anyway, just stuff to think about. Yeah, three times a jack. Anyway, sorry, I totally went off track today. My bad. Sorry about that. Do you think S&P 500 could go up in this week, or Bitcoin, or they both go up in this week for a little? Well, KF, I mean, look, it doesn't matter what I think. I mean, personally, I look at what's going on with the equity market. So let's just start with there. And again, I'm going to wrap this up in 3 minutes, hard stop. You look at what's going on with the S&P, and I'll do SPY because I don't have that one marked up as much. Technically, I don't really see any real great direction this week. Now, you do have some pretty big announcements coming up on Thursday. We've got some inflation numbers, which could create a little havoc for the markets. There's no, epic big earnings plays this week, which has been driving these markets. So I think you're just going to get a lot of choppiness. If we do go up, it might challenge the highs we established last week, but I don't see any real big move happening. Now, the picture's different for Bitcoin. Right, Bitcoin made this great move over the last couple of days, and there's a lot of talk about more upside movement here. And there's some major changes that have happened with regards to governments and companies adding it to their balance sheet, which will be part of my discussion later this evening. This is more interesting. If we hold here at 44,000 and don't pull back, you're going to see Bitcoin rip. I think Bitcoin's going to be ripping again to the upside here. It's had this aggressive down move, and all of a sudden, everyone's kind of looking for value buys here on Bitcoin and others. I mean, there's some major leapfrogging going on in the crypto space with regards to the top 10. But, I think that this picture is very different. If I was bullish on S&P or the Bitcoin, I'd be more bullish on Bitcoin right now. I think that this explosive 2-day move that it's had is much more an indication of pent-up demand waiting to buy a bottom. If I look at the S&P, that I don't see the pent-up demand anymore. I saw it, a few days ago, but the sell-off came, and all of a sudden, where are those buyers? We could get follow-through. I just don't see it happening. I don't see the catalyst. So anyway, there you go. That's mine. NJ, you can't actually burn Bitcoin. I mean, you could send it to an address and throw away the private key, but you can't actually burn it. Don't believe me. I know. How much time do I got? Let me look real quick. I want to show you guys what's happening for tomorrow. I apologize if I didn't get to some questions. I'll get to those tomorrow. Here's your economic calendar for tomorrow. We have for the U.S. crude oil inventories, which has been one of the most inaccurate forecasts in the history of the planet Earth. But that's what's coming out. You also have final wholesale inventories coming out for the U.S. And then for the rest of the world, not much. The U.S. has a 10-year bond auction, which, last one was 1.72. Today we're looking at 1.9 something. We might actually get higher than that. We were 1.965. That bond auction may push prices up even further. And then from your earnings calendar, you've got Canopy Growth before market opens. Same with CVS, Disney, Twilo, Molina Healthcare, and then Teva Pharmaceuticals and GSK, GlaxoSmithKline reporting earnings tomorrow. All right, everybody, apologize for the hit and run, but I did decide to do the show. I wanted to make sure I still brought it up and got the show done for you. So thank you guys so much. Apologize for the quick one, but duty calls, man. I'm a busy bee. So thank you guys so much. If you have comments, questions, feedback, email me at TraderMerlin@gmail.com. Until then, happy trading. I'll see you for your Wednesday show. Take care, everybody.